Have you ever wondered why the US government holds over $600 billion worth of gold, but practically zero Bitcoin? Let's look at the charts. Here's Bitcoin's price over the last decade, a wild, heart-pounding roller coaster of massive peaks and gut-wrenching valleys. Now, here's gold over the same period. It's calm, steady, almost boring in comparison. So why would the world's most powerful government choose the slow and steady asset over the one with explosive potential? The answer goes way deeper than just numbers on a screen. It's about what happens when the world hits the panic button. Imagine the global economy is like a house on fire. In this chaotic scenario, you need a fire extinguisher, something reliable that you know will work every single time to put out the flames. For governments and central banks, that fire extinguisher is gold. It's their ultimate insurance policy. Gold has been money for 5,000 years. It's tangible, it's universally accepted, and it holds its value when everything else is falling apart. Now, think about Bitcoin in that same burning house scenario. With its insane volatility, adding Bitcoin to the mix is like throwing gasoline on the fire. When a country's financial system is collapsing, the last thing its leaders want is an asset that could drop 20% in a single day. They want stability. They want predictability. They want something they can hold in their hands and know, with absolute certainty, that it has value. That's why, in a true crisis, central banks don't rush to buy digital codes. They repatriate physical gold bars. They want their insurance policy at home, safe and sound. This leads us to the critical issue of national security. Let's visualize it. On one side, you have Fort Knox, a fortress of concrete and steel, guarded by the US military, holding thousands of tons of physical gold. It's a tangible symbol of wealth and power that you can physically protect. On the other side, you have a server farm, representing the digital nature of Bitcoin. While Bitcoin's decentralized network is its greatest strength, for a nation-state, it's also a potential vulnerability. What happens if there's a large-scale power grid failure? What about the risk of quantum computing cracking the encryption in the future? Or a sophisticated state-sponsored cyber attack? A government needs to have absolute control over its strategic reserves. With gold, you put it in a vault, you post guards, and you know it's there. With Bitcoin, control is spread across a global, decentralized network. No single entity, not even the US government, can fully control it. And for a superpower that relies on maintaining control, that's a feature, not a bug, that they simply can't accept for their primary reserve asset. But here's where the story gets really interesting. There's a strange little accounting rule that could change everything. Officially, on the US government's books, the price of gold is fixed at just $42.22 an ounce. Yes, you heard that right. Not the market price of over $5,000, but $42. This is a historical artifact, a statutory price that hasn't been updated in decades. So, while the US holds over 8,000 tons of gold, its official paper value is laughably low. This creates a fascinating opportunity. A recent proposal, sometimes linked with figures like Senator Lummis, suggests a clever idea. What if the US government simply updated the book value of its gold to the real market price? This single accounting change would unlock trillions of dollars in unrealized gains on the government's balance sheet. Suddenly, there would be a massive surplus of capital. And what could they do with that newfound money? They could use it to buy other strategic assets, like, for instance, Bitcoin. This strategy would allow the government to build a strategic Bitcoin reserve without having to print more money or sell a single ounce of its precious gold. It's a way to get the best of both worlds. So, where does this leave us? Is it gold versus Bitcoin? Not at all. The smart way to think about it is gold and Bitcoin. Think of a nation's wealth like a massive building. Gold is the bedrock foundation. It's the deep, stable, unshakable base that has been proven for millennia to withstand any storm. You don't build a skyscraper on shifting sand. You build it on solid rock. Gold provides that ultimate security. Bitcoin, on the other hand, is the skyscraper itself. It's the modern, high-tech, high-growth asset built on top of that stable foundation. It represents innovation, future potential, and a new frontier of digital value. The US government understands this dynamic. It will always keep its gold as the ultimate insurance policy, the bedrock of its financial strength. But the idea of using the hidden value in that gold to strategically acquire a position in Bitcoin is no longer just a fantasy. It's a serious proposal being discussed at the highest levels. Building a strategic Bitcoin reserve could be the next major step in securing America's financial future for the digital age. without compromising the security that only physical gold can provide. It's not about replacing the old with the new. It's about building a stronger future with both. Thanks so much for watching. What are your thoughts on the government's stance on gold and Bitcoin? Let me know in the comments below. And if you enjoyed this deep dive, don't forget to like this video and subscribe for more content just like this. See you in the next one.